Here's the Elliott wave forecast for April 1st, 2008. The NASDAQ on the 10-day chart. Best case scenario is that we have wave 1 and this is wave 2. That's the best case scenario. What would happen what would happen is it would hold a 2230 and rally back over 2345. Problem is though is that this fade has lasted a little too long, and wave 2s are usually quick. But if it happens to hold 2230 and go rally back over 2345, great. But the worst case scenario is that you get a downward 3 that would break 2230 and even test 2157, which is the recent low. S&P. S&P is like the fade is more pronounced. This area right here is just hideous. It's ugly to look at. I wouldn't call it a wave 2. I'd love to, but it's just not doesn't look good at all. Best case scenario that it holds 1290, 1295 and rallies back over 1358. If they can do that, they can form up with 3. But worst case scenario is there's a downward 3 that takes out 1295 and tests 1257. Right now, I just don't like the slope of this fade in the Dow. Also, this right here is just ugly. That's not a wave 2. I don't want to call it a wave 2, but if I was going to be very optimistic, I'd call it a wave 2, but I'd rather not. But the best case scenario is that it holds around 12,000, 12,050 and rallies back over 12,600. If it can do that, it can form an upward 3, but the fade is just hideous. Worst case scenario is that it drops below 12,050 and tests 11,700. That's the worst case scenario. I mean, I'm looking for I would actually prefer to see a fade than any kind of impulse, just because it doesn't look right to me. Just don't like it. Still, it's a wrap.